Please tell me, can I afford this? Anyone? After 1 year?
No, after 1 year we can't afford.
Because the cost of the product has been already increased, right, by 12 rupees. That means 12% increase. So over the period of time, the cost of every product that we use, they somehow increase. Okay, mostly if we say, right, and that is due to inflation. We understand this word very simply, right? Okay, in macroeconomic language we call it inflation, and simply we are just saying there is a rise in the general price level. Okay, the prices of product we use, they are increasing over the period of time, right? So now why did this money didn't grow? Because I need to park this money somewhere so that it can also grow. So let's say I kept this money in bank. Okay, after 1 year, okay, the bank gave me 4% return. Okay, so my money grows to 104 only. Can I again afford it?
No.
Again, because the money is still less. It would be better that I would have bought it year back only, right? Getting my point? So basically, we always want that the money that we have should always be greater than there is a rise in the inflation, the price that is increasing the economy, right? Okay, now let's say I invested this money in some share. I bought this share, right? And that stock rises to, let's say 25% in a year. So that stock give me 125 rupees after 1 year, right? Okay, now can I afford this?
Yes.
Right, now there are two things here. I can afford this very easily, and I can save some rupees also, extra money, right? So this is the ideal situation, right, that I always looking for whenever I'm doing the investment. Because at certain point of time I sacrifice some of my current consumptions. That's why I saved some money, right? Otherwise I would have used this 100 rupees. So now I always want this kind of situation to be generated. Okay, now this word is what I perceived is that there are two things attached to this. First is inflation. This inflation, this I and is has been taken from this word inflation. Okay, plus West. Okay, this West is basically a simple meaning that we can understand out of is this. It is protection. Okay, it is protection something against this particular word. So investment is giving us a protection against the inflation that we have having in the economy, right? So if we don't do, our money will not grow. Okay, we are lagging behind. If we do, we grow. So we can easily maintain our current living standard very easily, and we can save also. Getting my point? So are we understanding what is this word is? Any doubt, please, till this point, ask me. Are we getting what is investment? Why we need to do? Right? Any doubt? Right? No? Can we move next topic?
Yes.
Okay, fine. It's very simple, right? So we always want this, this situation to be generated, right? So we always want like this. This is always to be there. Our return should always be greater than inflation. Okay, fine. Now let's move to next part. Now there are a few factors that affects our investment decisions. Anybody tell me? Can we write something? Some factors.
So risk.
Okay, first is risk. I first time I got this answer. First time, right? Because every time we always, whenever I talk about this, I always get the answer, sir, return. Okay, so very good answer. Okay, whosoever gave this answer. Second, please, anyone? We cannot just look for risk only in this, right? This is one of the prominent factor. What could be the other factors, right?
Time period.
Time period. Okay, then mean time horizon. Okay.
Percentage of return.
Okay, so now the return, right? Fine. Anything else or kuch? Bas teen cheezein, only three. There should be other factors also, right? Think from your perspective. What are the things that you are going to look for when you are doing an investment?
Knowledge.
Sorry.
Knowledge.
Okay. And
the available capital.
Okay, capital. Okay, yes. Again, okay, fine. Capital, fine.
Maybe capital protection. I don't
So
know.
capital protection is, we're talking about risk again,
Okay.
right?
Yeah.
Right. Yeah.
It's time we can spend on this to track investment.
Again, time horizon, right?
Okay, time horizon.
The final
yeah.
corpus which we are looking for.
Okay. So finally, there must be some goal, right? Okay.
Yeah.
See, whenever we do investment, there must be some goal-based, investment, right? I want to build some house. I want to, buy some car, whatever, right? So I'm started saving today only. Fine. So I'll go with this. You can say your, goal-based. Okay. Fine.
Liquidity management.
Okay. No, liquidity is good point. Again, a liquidity point, right? Okay. Now, there's another part that we need to look for. We should be, considering the tax also,
Yes.
right? Okay. I don't know about, about Germany and other countries, but in India, there is, there are a lot of things which are, whenever we are earning something out of these markets, have to pay a lot of tax, right? Okay. So we'll share that what are the things, right? So as of now, we got a lot of points, right? So let's talk about risk and return first. Okay. These two factors are always go hand in hand. Okay. Now tell me two things. I'll ask one question. See, there are a stock A and there is a stock B. Okay. Now tell me the return on a stock A is 15% and the return on stock B is again 15%. Fine. Now the risk on the stock A is 10%. Now tell me which one we are going to choose.
Stock B.
Why? Any idea?
Because risks are less.
Risk is less, right? So somehow inherently we are somehow this is embedded in our thinking that we always somehow a risk manager. We always think from this perspective. Every investor is a rational investor. He always take this decision. We always try to minimize our risk. We are not bothered about return as such. Okay, but it should be prominent, right? It should be it should be affordable. That yes, we should be getting this much return, right? But first of all, we always look for risk. That what are the risks that we are going to have in this particular investment, right? Okay, so we cannot ignore any of these parts, right? Both always go hand in hand, right? Okay, fine. Now you talk about time horizon. Again, your time horizon is based on your goal. Let's say I have a goal which is likely to achieve. I wanted to achieve this in 10 years, right? So again, I'm planning the investment according to that. Okay, I'll be going with equity markets, right? Specifically because there are in long-term equity markets generally perform, and they perform in a they will provide you good returns over the period of time, right? So I can go with this. Okay, now capital protection and capital, obviously we require capital to we need savings, we need investments, right? Then only we can generate money out of it. Now this part is very important. Here we discuss about liquidity. Let's say you did some fixed deposits, okay, for let's say 10 years, or let's say for example, let's say 5 years. Sorry. Okay. So do you think that this particular investment is a liquid thing? Anyone?
No.
Because we have to wait for next 5 years to get this money back, right? Okay, fine, because it is fixed, right? We cannot withdraw this amount, right? So liquidity is a major crunch. Let's say I have a property. Okay, I have a property in somewhere let's say outskirts of Delhi. Okay, I want to sell it. Can I sell it very easily? Depending on the location, if that is in good area, that's I can easily sell it. But let's say it's totally in outskirts, that would be very difficult for me to sell, right? Okay, so again, that particular investment is not so liquid. Now again, let's talk about equity shares, right? Your stock markets. Okay, so stocks are very liquid, right? You can sell them anytime. There are a lot of people who are actually willing to buy the stock and sell those stocks. So from this perspective, equity markets are very prominent, right? Okay, fine. Because we can easily trade these stocks, right? Every day stock market opens and we just jump in the market, right? So equity markets are very liquid. Now apart from that, when we talk about tax, right? So there could be in India basically we charge two type of taxes, right? A short term and the LTC, the long term capital gain. There are two type of taxes they are charging. Okay, so short term is basically from before 1 year. Let's say I'm doing intraday trade, I'm buying and selling today. probably in a month, probably in a week, right? Or probably after 6 months. So that all are considered in short term. So whenever I'm booking some profits, I'll be getting, I have to pay 15% flat rate tax. Okay, to government, right? On LTCJ, that the rate is 10%, but only over and above 1 lakh rupees. If I'm, getting 1 lakh rupees as a profit, so whatever the money I'm generating over and above 1 lakh rupees, I have to pay tax on that. Let's say over the period of 2 years, I bought some shares 2 years back, let's say, and today I'm selling those stocks. Okay, and I'm generating profit of 2 lakh rupees. So they will deduct 1 lakh rupees out of it, and I'm left out with 1 lakh. So I have to pay 10% on this amount. Okay, so this is a provision in India, right? So how do we two type of taxes on this? So these are the few factors that we should be considering while doing the investment. There are few investment under which they are tax free, totally tax free. They don't charge even a small penny for taxation part, right? So again, we should be considering that whenever we are trying to save our tax, right? So we invest in those particular investments so that we can reduce our tax burden. Fine. Any doubt in these points? Anyone? Please.
The last tax part. So don't we have to pay taxes if we invest in stocks?
See, as such, there is no, if you see, if I'm trading the stocks every day, even if I'm trading the intraday, right? Okay. So whatever the profit I'm generating over the period of time, okay. So again, we need to decide that this is the short term or long term. Okay. If I'm, buying and selling in every day, doing intraday probably or weekly trade or a monthly trade, right? According to this, those investment will be considered in the short term, right? So again, I have to pay the 15% flat rate on whatever the income I have generated over the period of 1 year. Okay. Let's say I earned 2 lakh rupees, right? So I have to pay 15% flat on that. Okay. That will be added to my taxable income. Fine. So only on the profit. In case in case we are, incurring loss, we don't have to pay the tax. Okay. Only on the profit, only on the income.
But Rahul, we have tax slabs, right? I mean, India, we have different types.
No. So in case of when we are paying the taxes on, that, you're talking about income tax, right? Tax
Yeah.
tax. Okay.
Yeah.
So that are the income tax, right? Whenever we are earning income from some sources, right? So we have a slabs on those part. Okay. Now this stock investment is considered as capital gain. Okay. So capital gain is a different head under which we pay the taxes. Okay. We have 5 heads under which we pay tax. First is income. Second is house property. Okay. Third one is your business income. Okay. Then fourth is capital gain and other incomes. So these are 5 heads. So your income tax will come under this. Your stock gain and other gains will be considered in this. So there is a flat rate on that of tax, right? Here we have a slab in income tax. Okay. Fine.
Under each head, there is a separate cap, or all together, we have a cap of 5 lakhs.
See, for that particular, the slab rates that they basically gave for this particular area only for income, right? Okay. Now, even if I'm not paying any tax under income tax, if I'm generating a lot of income in capital gain, I have to pay the tax. Let's say I'm not getting salary from anywhere, but I'm earning a lot of money from stock market only. So I will not be paying any tax under income tax because I don't have income from any salary, right? But here let's say I'm earning 10 lakh rupees every year, so I have to pay 1.5 tax to government, right? Because we are charging the income on different heads, and there is a treatment for every income in these heads separately, right? Okay.
So
Yeah, paying tax is fine, but the tax slab is, I think, 4 lakhs, right, for income, and for here you are saying it's only 1 lakh. It crosses 1 lakh.
Yeah. For that only for that in case of long term, when we are keeping that investment for more than 1 year. Okay. For short term, we have to pay whatever we are earning. Let's say if we are trading for shorter period of time, we have to pay the tax whatever the income, right? Even if you are earning 10,000 rupees, even if you are earning 50,000 rupees, so you have to pay. But in case of long term, you have to pay only and above. Or slab is for 1 lakh. Under that, you are relieved under 1 lakh rupees only. After that, whatever the income you are generating over and above 1 lakh rupees, you have to pay tax again, right? Okay.
And how much tax do we need to pay for the short-term trade?
15%, right? Let's say you earn 1 lakh rupees. in last
Okay,
year.
okay, got it.
Okay, so you have to pay 15%. Okay.
So when will this money be deducted, like this tax? On the
in
same
the
day?
you know whenever you see whenever you are filing the tax, right?
Right, yeah.
Let's say you have you have paid you have done with your financial year, right? When you are filing your return, you have to mention that these are the incomes, right? Okay, these are I've generated income from this source, this source, this source, and and capital gain also. So under which they will be calculating your taxes from income, from house property, from business and all, right? So
Okay.
under which when they will calculate, right, the whole tax, right? So they will tell you that your income is the capital gain you are earning this much, right? So you have to pay this. Okay.
So when
So
we are
whenever you're filing the
okay.
sorry,
So
please.
when we are selling a share, there are some tax being deducted. So what
Yeah.
is that tax?
So those taxes are basically these are the commission cost for trading, right? See, whenever we trade, there is a first thing that buy whenever we buy sell something, right? So there are few charges that exchange and broker charge. Okay.
Yes.
So first part is brokerage for a broker, right? Because he's facilitating a trade to you. Okay. He's facilitating that the brokerage account and all those things, right? So for that he's charging some brokerage whenever you buy or sell on both, right? Okay. Now there are other charges, probably GST and security transaction tax, other cess. So government is charging different type of taxes. Okay. And very small. These are very small, right? Hardly make any difference to your trading account, right? But still government charge, because there are a lot of people are trading in the market and they're taking very small amount, very small, right? Even if you trade for let's say 10,000 rupees, they are charging probably 150 rupees, right? Not more than that. So these are separate taxes that we need to pay to the government. Okay. Probably
Okay.
NSE tax, SEBI tax, right? Like this.
So, so
Yeah.
for TDS here for this capital gains, or do we for the shares or for the derivatives, do we have TDS approach, or is it purely that we have to pay the tax at the end of the year?
No, we have to pay at the end of. There is no TDS for this.
Okay.
Okay. So TDS is only for specifically for income, specifically in India, right? Mostly. Okay. But that will be recorded under your PAN card details, right? Because you are trading, so they are aware of that you are trading under this, right?
Yes.
Okay. So if you somehow try to eliminate this income, you will be in a soup. Okay. So you can run out of it. You have to find it. Okay.
Okay.
Yeah, maybe one more question. So when you say you earn, so does it mean you sell your shares, or if you still hold your shares, it is still earning because it is more than the amount?
No, when I'm selling, when I'm generating profit means you have to sell.
Okay.
Okay. See, I bought share on, let's say today, January. Okay. I sold them those stocks on, let's say, March. Okay. Fine. So I have sold, specifically I've sold, right? So in that case, when I sold the stocks, I have generated some income. So let's say I earned 10,000 rupees. So this will be added in my profits. Okay. Likewise, I done, let's say, 15 trades in a year, and I've generated, let's say, 2 lakh rupees out of it. So then I have to pay the tax in the last one. Let's say I bought another share, let's say in let's say December. Okay. And I kept this for, kept those stock for let's say 3 years. So I don't have to pay this tax on this investment, but whatever I have bought and sold, I have to pay the tax on those only.
Yeah, okay, understood.
Right? Yeah.
My question is that so
Yeah.
this platforms that so Jezera and all these things, do they provide some sort of summary that you have to pay this much tax for this year?
Yes. Whenever you're opening your account with any broker, right? So they have a separate, account detailing that, under which, they will tell you that, this is your transactions, you have done these kind of trades, right? And, you can easily calculate your profit. Even you can, a lot of what I do is I basically hire some, started accountant and he do the investment, he do all the taxation part. But somehow the new, the brokerage accounts, right? We have, right? Like Zerodha and other, brokerage, they provide you separate, Excel sheet under which they will provide you that this is the tax.
Oh.
They calculate on your behalf. Okay. Right?
So,
But
sir,
generally, we also try to calculate by ourselves that what are the tax actually we need to pay, right? Okay.
so sir,
we can yeah, please.
based on our discussion till now, so for the beginner like me or like many other in this group, do we, like as a beginner, do we should look for long-term investment or a short-term trading?
Depending upon your interest, right? Actually, I would say, right? So see, I always did for short-term trading, right? So there is no as such change in the trading criteria, right? So if you're generating good income in short-term trade, go for it, right? Okay, long-term investment is you can plan your investment for a longer period of time. Let's say, you think that there are good stocks and they can give you a return over the period of time. Keep on buying those stocks, right? Okay, doesn't matter. Okay, but whenever you're trading in the market, you have to pay in NHS. So I would say, blend your trading system. Okay, do some investment for long term and do some, keep some capital for short term also.
Okay.
Both the things, right? Okay.
Mhm.
No, there is no specific, you always wanted to go for long term. If you do the investment, that is perfectly fine. Okay, whatever the income you are generating, save some amount, go for investments. Okay, keep that stocks for longer period of time. Okay. There are a lot of people I know, they bought Reliance, they bought Axis Bank, the SDFC Bank when the stock were trading at 10 rupees. Okay. So they bought and they kept it. Now stock is trading 2,000, 5,000, like this, right? So they are just, doing this for long term, right? So they don't have to be worried about,
Yeah, just
the short term, long term, right?
yeah.
Okay.
Regarding long-term capital investment, I heard that there won't be any taxes in India. Is it true?
See, in 2018, they have introduced a LTCG tax, right? Okay. And in 2018, before that, there was no tax on long-term capital, earnings, right? So probably, I think, as of now, I haven't heard about the LTCG till now. So this is still prominent. This is still in there. Okay. But probably if recently in the recent budget, probably they have removed, I need to check it and will definitely tell you. But, before 2018, it was not there. Okay. They specifically introduces LTCG in 2018. Okay. If in the recent budget, they have introduced to, reduce this tax or probably eliminate this tax, I need to check it. Will definitely tell you.
Okay, thank you. Let me know.
Probably next session. Okay.
Yeah.
Because, early India was not, eager to charge the capital gain, taxes on LTCG, right? Because they wanted to, promote this kind of investment. They wanted people to invest in stock market. Okay. Now they can generate income out of it. So they are doing it, right? Okay. Yeah. Any other query, please?
Sir, I'm a student and I started on this April 2020 in investment and trading.
Okay.
So I have done so many trading and I took the profit and made for investment. So do I have to file income tax after 1 year?
Yes, you have to file whatever. See, never try to eliminate your tax. Okay, in any case. Okay. Because whatever you are doing, because you opened your account, right? Okay, you have the trading account, right? So you have the PAN card, right?
Yes.
Okay, fine. So again, your transactions are getting recorded in this. Okay, even though if you are not generating any tax over there, just file your return. Okay.
Okay.
Never eliminate your tax, even if you are even at very early age of your life. Okay, even I was eliminating these kind of things early, right? Because I was earning, but I was not filing my taxes. Okay, even you don't have any zero liability, just file your tax. Okay.
Okay. So
that record intact, right?
Right now I'm in Germany. I came in Germany this December. So is it possible?
That is okay. That is okay. That is okay. Yes, you can file your return, right? There is no issue, right? Okay.
Okay.
So whenever the time will come, probably in March, just go in income tax website or ask some chartered accountant, provide him your details, and he will do the needful for you, right? You don't have to take worry about if it is difficult for you, right? Because no, everyone cannot do this. Even sometimes I feel it is very difficult. Okay, because I do lot of trades. So let's say I'm doing 500 trades in a year. How would I calculate that tax, right? So I leave it on chartered accountant. Please do this for me, right? So it's very difficult, right?
So every year we have to file this income.
Yes. Don't ignore it, right? Okay.
Thank you.
Right? Okay. Yeah.
And being an NRI, and I still don't have my OC. I'm still in the process of applying. So how do I open the account for trading? So you have the probably you have some your documents of probably from India, right? Okay. Yeah, I also have an account in India. It's still in it's in NRO, non-resident ordinary account. I still have to convert because I did not get my OCI. I didn't convert the account still. Okay. So I'll see to it because there is one of friend of mine who's actually working in this. I'll talk to him what he say about NRI's client. Okay, I need to check because I haven't contacted much with a lot of people outside from India, right? So need to check it. Will definitely tell you. Okay. Okay. Thank you. So whatever the query you have, just put it to me, right? I'll see to it, right? Okay. Fine. Okay. Fine. Okay.
Okay, so I just got a query. Okay, fine. Okay, so you can contact Deep. Okay, so he do this all kind of things, right? So just contact him. Okay, he'll help you out. Fine. Okay, so are we clear till this point? Any other queries? Can we move forward? Next topic. Okay, fine. Okay, see. So we have done this. Okay, so I'll be coming to this later on. Okay, so this is very simple thing. Okay, now understand this thing. Now we talked about this thing, right? So whenever we, investing in financial markets or any kind of, stock markets, we are specifically talking about capital market. Okay, now what is it specifically when we talk about capital market? We are dealing in capital. Okay, the flow of money is from both the sides. Okay, whenever investing, we are somehow, trading the capital only. Okay, so, you see those banks, those stock markets, those insurance companies, right? Those, banking financial companies, right? All those companies are, somehow they are the part of this, right? Okay, so, investment banks, all these companies, which are actually dealing in, some kind of money or, capital. So they are a part of capital market. So let's say how I'll define it. See, we earn some income. Okay, we spend some income. Okay, and then we do the saving. We have discussed this on the first, slide. Okay, second, like, people like us, individuals and companies, these people are considered as surplus amount. They have the surplus amount, right? Because we are doing the savings, so we have the surplus amount, right? Okay, now we generally park this amount to some kind of institutions. We, kept this money in bank, or we generally what we do, we, buy some, we do some fixed deposits, we buy some shares, or we invest in different kind of, investment horizons, right? Now see, so these are, every, institution which is working, as like bank, or probably, all these exchange, insurance companies, all these companies are basically known as intermediaries between, there's one party, there must be second party also, right? Okay, so there is surplus. What should be on this other part? If the bank is working as intermediary, there should be two people, right? Okay, so who will be here? कौन होगा यहाँ पर? See, bank has took money from me, let's say 1 lakh rupees. Okay, so what bank will do with this amount?
They will be giving it out as a loan.
Okay, so they will be giving this amount as a loan to someone who is in need, right?
Yes.
So who all are people basically are in need?
Industry,
They will-
manufacturing.
Again, there would be individuals and companies, right? Right?
Yes.
So, because, sometimes people earn profit, companies earn profit. So they keep this money in the bank. Okay. And there are people who actually require money. So the people who require money, they are on the deficit side or not. Right? So that's why the bank is working as an intermediary between these two people. Okay. So the bank is taking money from us, deposits, and they're extending loan to these people, probably people or to the companies. And they're charging a higher interest rate on them. Let's say they're charging 9% over it. Okay. And they're giving us how much? 4% only. 4% only. 3%. So this 5% is their income. Getting my point? So this is the capital market. So whenever we're buying share, see all those institutes which we have, as an intermediary. So they are working as they are, helping us to channelize our funds to different sources, right? Okay. And over them, they are generating the income. See, this happens every time. I deposit my money in bank. So what bank is doing? They are giving the money to the needful. Okay. The person who is actually in the need, they are providing this loan to them, right? Whenever we are buying the insurance, what happens in insurance? We are paying the premium. Okay. And, the company is actually settling some, issues, people who are actually, they are in the need of your insurance claim. So they are settling that amount there. So somehow there are people in need and somehow people have surplus money. So they are just channelizing the fund from surplus to deficit. It is happening everywhere. Fine. Any doubt? So, stock market is a part of this market. So we'll be dealing with stock market specifically. Till now, we are clear. Any doubt, please tell me. Clear? Shall we move?
Yes.
Next part.
Yes.
Okay, fine. Okay. Now see, there are two things. This capital market, under capital market, we call it something called financial market, under which we trade. Okay, we buy shares, we buy financial securities specifically. So when we talk about the financial market, we have something called money market, we have something called capital market. Okay, now I told you something just before, a few slides back, something called short term. Okay, I told you short term is for how much time?
Less than a year.
Less than a year. Okay, so 1 year approximately. So here is the same. Okay, and more than 1 year. So this is capital market. Now, what is money market specifically? Money market is kind of, government is actually involved. Government and RBI. Your RBI is actually involved in this kind of, money market. Okay, so what they are doing specifically, RBI is actually pushing the money in your system, right? In India, right? In the whole country, right? So government is issuing some securities. RBI actually buying those bonds or those securities, right? So to push the money in the economy. So somehow, how much money should be, should be there in the economy. Okay, what is the quantum of the money should be staying in the economy, that is be managing by RBI through money market. Okay, this market is not concerned about us. We don't have to concerned about this money, right? This particular market. Okay, but there's a lot of money that is flowing in this market through this in this market, only from money market only. Okay, there are a lot of money that is coming to India through money market. A lot of big institutions are keeping their money in the in money market specifically, just for a shorter period of time. And this market is totally safe, no risk, but they're providing you very less interest rate, let's say 5 or 6% only, not more than that. Okay, so basically people are raising the capital from here also, just for a shorter period of time. Let's say, for example, there is a bank, HDFC Bank. Okay, so they have surplus amount of money. Okay, so they can go to money market and park this money in the money market. Okay, now RBI got the money from here. Let's say ICICI Bank is in need of money. So what they will do, they will give this money to them. Okay, so again, happening the same thing which we discussed in the last slide. Okay, so money market is only for shorter period of time. They can only lend the money for a shorter period of time, and they can borrow the money for only for shorter period of time, not more than 1 year. Okay, now under this capital market is whenever we are dealing with the long-term borrowings and long-term lendings. Okay, now see, company, there are companies, there are two companies. Let's say you guys know about Flipkart. You guys know about this company, Flipkart?
Yeah.
Right?
Yes.
Okay, now the full name of this company is Flipkart Private Limited. Okay, there is a company which is known as, let's say, RIL. This is Reliance India Limited. Okay, why the private is not written after this company? What is the reason? Why Flipkart has a private attached to it? Why Reliance does not have that word attached to it?
It's not privately held, right? Many people buy their shares, so I don't think it comes under privately held by, let's say, 2 people or 5 people.
Okay, okay. Any other idea? Any other?
The management contains less than 50% of shares, so that's why I don't know. This is not private, I guess.
No, you are somehow very near. Yes. Okay. Any other? So there are a lot of companies. There are two companies specifically. One is private limited. Second is only limited. Okay. Yeah, we call it public limited. Okay. So these companies are public limited. This word attached to it. This is public limited. What is this public limited means? The company which has a share in the stock market, which is known as a public company. That means what is happening? The people who bought the share of this company, public. Let's say I'm a general public, right? I'm a part of general public, right? I bought a share of Yes Bank. I bought a share of Reliance. I bought a share of HDFC Bank. So, and there are a lot of people who are actually doing the same thing, right? They are buying different shares of different companies. So all those companies which have a share in the market, right? We call them a public company because public are a part of the company. Okay. So we talk about share, right? What is a share? So share is just a ownership in the company, a small, very small ownership in the company. Now, let's say we know that Infosys is a very big company, right? So let's say I bought 100 shares of Infosys, although it's very small, right? But somehow I am the owner of Infosys in very smaller portion, very smaller, right? But I am the owner. Okay. But the people who actually started, they are holding 50-60% of the holdings of the company. So they are the majority, but we are the minority. We have very small holdings of the company, right? Again, that's why, you know, the public is also part of that company. So that's why the company is known as public company. Are we clear till this point? Anyone,
Yes.
any doubt? Okay. So, you know, after, you know, company issue the share first time, it becomes a public company. When they ask people to join their company and they become a shareholder of the company, that's why company become public limited. So they don't add public. Okay, they just write Reliance Limited. Okay, SDFC Limited. Okay, ICC Limited. They just don't write it ICC Private Public Limited. Okay, they don't write this like this. Okay, fine. Next part is now the capital market is like this. See, a company want let's say company have the capital of 100 crores. Okay, the company's current capital is 1 crore and it is a private company. Now let's say company required 20 crore rupees more to start some, you know, probably a new venture or probably some new project. Fine. Now under this, company can raise this capital from question mark. From company can raise 20 crore rupees from
Public.
where?
Public.
Only
Money
public.
market. Money market.
They can raise the money, you know, from money market. But issue is they need this capital for a longer period of time. The project will take at least 10 to 20 years to complete. Let's say.
Bonds.
So they cannot go to money market, right?
They can go for a
Bonds.
bank loan.
So they will go to.
They will go to retail and institutional investors.
Okay, they can go to them. Apart
Bonds
from that,
and
they can go to
debentures.
bank. They can
Yeah,
go to bank
bank
also.
loan.
They can take the bank, right? Subse the easiest way to take the loan, right? Okay, they can go to and they can ask for loan. Fine. The first one is you guys second said, okay, we can go to institutions and public, right? That means we are somehow involving other people to be a owner of the company. Okay. Third, probably company can borrow from some, you know, private institutions also. Very few people. Okay, like Warren Buffett. Okay, I'll go to him. I'll ask him some money. Please give me. So he can also lend it, right? If we feel that my business is good, you know, we can take it. You know, Ratan Tata invest in a lot of, you know, small businesses also. You know that, right? Okay. Whenever he feels that, you know, this person, this you know, small startup can work, so he just invests in this, right? So they can go like this also, right? So they can, you know, ask some people or, you know, you can say a private, you know, institutions to invest in the company, right? Your business, right? So there are different sources of fund. Okay. So basically, if I go with bank, what is the issue? For 20 crores, I need to pay, let's say, 9% every year. There's a huge liability on my head. Because I know the project will take 10 years to complete. After that, I'll be able to generate income out of it. Right? So how will I pay it? If I'm not generating income, how will I pay this interest rate? So this is not at all a good, you know, way to raise the capital. Okay. There are other sources also, right? But, you know, when we talk about this public investment, what we do, basically, let's say this is my company. I have 100 crores worth. So to raise 20 crores of the capital, how much should I sell of this? How much percentage? If I'm selling the ownership of my company, right? So how much should I sell to raise this capital? 20%. So I'm selling the 20% of my company. To whom? To this general public. I'll ask them to be a part of my company. And I'm raising the capital for how much? How much here? Let's say 10 years, 20 years, or let's say for infinite period. So I'll going to the capital market. I'm not going to the money market. Okay. So stock market somehow related to the capital market. Okay. Because the money the company raises for not for a smaller period of time. They're taking for a longer period of time. Fine. Okay. Now I'm selling the 20%, but what I'm doing actually, I'm giving the ownership to these people. Okay. And I'm asking the money from them. Please give the money. So they will invest in my company. I'll receive the money. My capital will increase to, right? by selling some of my ownership. So now I am holding 80%, else people are holding 20%. Now this company has become a public company. Before that, it was a private company. Now it has become a public company. Are we clear till this point? Any doubt?
Yes.
Simple. Okay. So whenever the company issuing the first, share for the first time, they have to follow a process that is known as IPO market. Okay. So capital market can be again bifurcated into two parts, primary and the secondary market. Now, when company issuing the share for the first time to clients, to, or you can say, or, the general public, we call it a IPO, initial public offer. Okay. When company is selling the share for the first time, that is initial public offer. Okay. So there is a whole process of the IPO that is happening under the primary market. So when this process is completed, the share is actually shifted to secondary market after that. Because let's say company is selling only 1 crore shares. Okay. Now company has received the application for, let's say, 10 crore shares. So can company provide this 1 crore share to 10 crore people? Not possible. Okay. So what will happen? A lot of people's application will get rejected in the primary market. If I apply for any IPO that I want to be a part of your company, but company will reject it because somehow, they don't have that, shares to provide me, right? So they have to reject my application. Now what I'll do, I'll go to the secondary market to buy this share. This stock will come in the secondary market later part. After the process of the IPO completed, the stock will come to the secondary market where I can buy it. So there will be a lot of people who are buying the stock in the secondary market also. So this secondary market is known as your stock exchange, your stock market. Okay. So probably you are aware of, this kind of, this thing, NSE and BSE, right? National Stock Exchange and Bombay Stock Exchange. So these are, okay, secondary market. Fine. So these two markets are somehow connected. One is primary market, the second is secondary market. Please, any doubt? Tell me. We'll discuss this about this also. So are we clear about the primary and the secondary market? Any doubt? Proceed. Can we proceed?
Yes.
Okay. Fine. Now see. When we, now this is the basic thing, right? But when you talk about the secondary market, so there are, again, this is also divided into two parts. Okay. So one is spot market and second is derivative market. So spot market is basically, whenever we are buying equity shares of the company, we are just doing the transaction. We are transacting in the spot market. When we are specifically trading or speculating the market, we are using the derivative. Okay. So we'll discuss about it, all these things in detail, when the time will come. Okay. At this point of time, you just need to have this picture in my mind that, this is how this market is actually, structured. Any doubt?
No.
Are we
Rahul,
Yes.
just one doubt. Regarding money market, so
Yeah.
I am an individual, right? So can an individual go and invest in the money market?
Yes, before 2018, I think this was not allowed. Okay, now they have opened this particular thing for for individual, but again, there is a cap on money. I think, because you need to invest at least some amount. There is at least 10 to 20 lakh rupees. You need to invest minimum, right? So there's a cap on this. So there's a minimum investment you require, right? Earlier it was 50 lakh rupees. If you are on individual capacity, you can invest 50 lakh. You go to the market, right? Okay.
What would be an example of money market?
The treasury bills, you're aware of treasury bills and all this. What happens? Generally, government issues T-bills. Okay. Fine. This is for, time period is, let's say, 90 days, 180 days, and, 365 days. So these are the time period. Okay. So I can go and buy this treasury bill. They will providing me 6% interest rate on this. So I'll keep the money for 6 months. Okay. So 90 days only. So these are the time frame, right? So I can keep this money for 3 months, 6 months, and a year. So let's say I bought this treasury bill of 90 days. So I'll be investing 50 lakh rupees by buying this particular T-bills, and after 90 days, I'll receive the 6% return on that from the government only. Okay. So
Okay.
this particular thing is issued by government actually. Government is issuing the treasury bills. Okay. Fine. So we can invest in there. There are a lot of money is actually flowing. Probably you guys might have seen that the Scam 1992, that web series, right? If not, then please watch it once. Okay. So if you have seen that particular web series, so you might be seeing that, Harshit Mehta was doing that. He's, borrowing this money from this market and investing in the stock market. He know that he used to tell that, okay, we have the 15 days, right? So we'll pay it back. So, just, for a shorter period of time, he used to borrow the money from the banks. He used to invest in the secondary market, raises the price, sell and return the money.
Yeah.
He used to do that like that, right? Okay. If you see that particular web series, you will relate it, what I'm trying to actually tell here. Okay. Fine. Any doubt, please?
Sorry, I didn't understand what spot markets. What is spot market?
See, spot market is just a basic thing. Let's say, what is spot market? You go to market, right? You buy something, okay? You buy something, you pay in cash, right? Or whatever, right? So you receive the delivery on the spot for the product, right? So if I'm buying shares, I'm receiving the delivery on the spot. That is a spot market. So whenever we are investing the equity, we are doing the investment in the spot market.
Mm-hmm.
Now let's say something, I'll try to explain this also. Let's say I bought something from Amazon, okay, today. So I paid today, but I'm receiving the parcel after 4 or 5 days, let's say. So that is a derivative. Whenever I'm receiving the my product after a few days, let's say, or at least let's say after a week, right? So that is be considered in the derivative market. But there are more things to this particular thing, right? We'll discuss this in later part when we specifically discussing the derivative market. Fine. Okay. So spot market we can understand it is for the immediate delivery. I pay some amount, I'll receive the shares. Okay. So that is happening in the secondary market. Okay.
Hello.
Yeah.
Yeah. So in money market, only government is involved, or how it is?
No, there are a lot of companies. Government is actually issuing these securities, treasury bills, and all things. All
So
these
it is
things, right?
So it is an example, right? Like government.
Yeah, it is a kind of example. Like in secondary market we have shares, right? We have bonds, right? Okay.
Mm-hmm.
So likewise, the instrument which we're actually trading in this is our treasury bills. Okay.
Okay.
Treasury bills, government bonds, these kind of things, right? Okay.
Mm-hmm.
These are for only for the shorter period of time, only less than for less than 1 year. Okay.
Okay. And about this primary market, are the shares sold in the stock exchange itself or on other platform?
It is actually see, for initial public, they have tie up with banks, a lot of banks, right? So every bank, I think. So you go to your internet banking, okay? So you will receive there. There is an option of investment bank. The IPO market. Even if you have the mobile banking of any of the Indian bank, right? Just go there and you will see there will be an option of IPO attached to that. Just find this. There will be somewhere, right? Okay. So whenever they launch any kind of IPO, the companies which selling the share for the first time, you will receive the confirmation. The subscription amount there also. You can go and you can subscribe from there only.
So it is done through banks, right?
Yeah, generally, you can do it through your Demat account also. Your trading account also. There are different sources from which you can apply for the IPO. Fine.
So just hello.
Yeah.
Just confirm me once, like when we hear that the company is being listed for the first time. So does that mean the same, like they're selling that in the primary market, or something?
Yes, same. Probably you might have heard about few companies recently have listed the stocks in Indian market, right? Like the Indigo Paints and probably the Burger King, and there are a lot of companies. If you see, you just go to Google and find a lot of companies have recently they have listed the shares in Indian market. They were in the market, right? They were they were doing the work, right? But they are issuing the share for the first time. Burger King is a very good company, right? But they issued the share very recently. Zomato is probably coming with the IPO. LIC is coming with the IPO probably next year. That is from the point of government is saying that we are going to do some disinvestment in this company. So LIC is a government company, right? So they are coming with IPO probably in next year, FY 2020, right? I think, right? So there are a lot of companies which issue the shares in the primary market, and they keep on coming. Okay. So NSE, we have NSE, right? So in NSE we have approximately 1900 companies, approximately, and for BSE we have more than 600. In BSE we have more than 6,000 companies listed. Okay. So they keep on coming, right? Okay. So there are some are very big, some are very small. Even though we accept all the companies, right? who are doing their, somehow some business, right? Okay. Yeah, please. Any other query from this page?
Can a company go for IPO multiple times?
Oh, yes, company can go. Let's say first time I sold, let's say 20%. Okay. The second time I again some funds, I again want some fund, right? So I can sell 10% more. But I would not like to sell more than 50-60% of my company, right? So at certain point of time, I have to stop. Okay. So first time when company issue, that is known as IPO. When the second time they're issued there, that is known as FPO. Okay. So that is follow-on public offer or further public offer. You can call it like this, right? Okay. So company can, raise capital multiple times, but they will again put a cap to certain percentage, right? They will not issue more than, sometimes, they will not issue more than 40-50% to general public, right? Okay. Because, if generally public is holding that much portion, so company will be, will be in big dilemma how to take the decisions, because people will be, somehow interfering then in their decision making. So they keep approximately 51% with them always. Okay. Fine. Yeah. Any other?
So before IPO, like I was hearing some words like gray market premium. I don't know like how to relate with this. I don't know.
I'll tell you when we'll discuss about this IPO, I'll tell you how this comes in picture. Okay. Fine.
Okay.
We'll discuss in detail about IPO. Okay. Fine. Don't worry about it. Yeah. I have the query, so don't worry. I'll share with this, right? Okay. Any other apart from this till this PPT, this slide? Can I move? Okay. Fine. Okay. Now, see, apart from this, when we talk about trading, right? So we have different sources, right? So we can trade equity market, that is your share market, so stock markets. Okay. Now we can trade the fixed income also. Now, if you talk about, the UK market, US market, so they have, the fixed income and, investments are also traded in the financial market, right? Specifically, you talk about commodities also. Commodities are also traded, right? Okay. In India, US, UK, we have, okay. Now in Forex also, currency market. So, these are the different, asset classes under which we can invest our money and we can trade them. Okay. Specifically, why this is very prominent, because, this people, this fascinate people. I don't know why, but, commodities are also, very prominent in US, UK also, right? And Forex is, you might be aware of this, right? Forex is, a lot of trading. The most money that is actually flowing is through the Forex. Okay. Throughout the world, the most money that is actually, exchanging the hand in the any financial asset, that is fixed Forex. This is currency, right? Currency market is, the probably you can say 8 to 10 times bigger than all, altogether all these, asset classes. So, because, every transaction happening throughout the, globe is through the Forex only. Okay. Then commodities again is very big market, gold market, silver market, and then base metal market, right? Crude oil, you might be aware of that, right? So you can do that. Fixed income, yes, fixed income is again, good asset class, but mostly people are most, attracted towards this because equity markets does have the tendency to, beat your inflation very easily. Okay. So, whenever we feel that, inflation is approximately 6 to 7%, that is again very big, but, stock markets can easily provide you 15 to 16% return on yearly basis. Okay. Probably you might have seen that Nifty has grown, shown you probably a best return till now, in its whole lifetime, right? So, there are other parameters to it, right? We'll see to it. But as of now, if we go through this, we have these 4 asset classes to, invest. Okay. Any doubt? Please. No? Can we proceed? Okay. Now see. Okay. So these are, few details, so basically we are talking about common stocks. So equity stocks are also known as common stocks. The fixed income, again, we talked about treasury bills. These are other, bonds and debts. These are again other asset classes. Now, commodities, again, we have bullions. Specifically, we talk about precious metals, agriculture market, agriculture products, then energy with crude oil like this, and the metals, right? And Forex, we know about currency pairs and the cryptocurrencies, right? Very famous, okay, these days. Fine. So you might be heard about, the fixed, these all cryptos and all, right? Bitcoins and, the Ethereum. There are a lot of cryptos, right? Okay, fine. So these are the broad classification. Please, any doubt? No? Fine. Okay. Now see, whenever we talk about all these financial institutions, right? They're very big, right? We have banks, we have the insurance companies. So there we need some autonomous bodies which actually you can these companies can be regulated. So RBI majorly regulates the banking sector. Okay, so RBI is there to maintain your banking sector, right? So they are providing you guidelines and all these the issues that they are managing the issues of the banking sector specifically, if you say. Now conversely, we have the SEBI, okay, Securities and Exchange Board of India, for securities market. Okay, so either it be commodity market, either it be your stock market. So SEBI is actually managing these things. Okay, so any issue we can approach SEBI. Okay, any fraud we can approach SEBI. Okay, SEBI is actually issuing the guidelines for the brokers, stock exchanges, other companies which are actually directly involved with the stock markets. So their work. Okay, please, any doubt? So we need some bodies, right, which are actually autonomous, so that they can easily manage these kind of markets, because there are a lot of manipulations are going in the financial markets always. Okay, so they need someone who can they keep them tight, right? Okay, fine. So Harshad, before that 1992 scam, SEBI was there, but they were not, they didn't have that power. They are not autonomous at that point of time. So after that scam, they we provided that, okay, SEBI will be working independently now, and they can take any decision regarding any kind of scam happened in the financial markets. Okay, fine. Any doubt about this? Okay, now fine. So this is for insurance, and this is for pension funds. Okay, so not much in detail. Okay, now these are the financial intermediaries that actually working in this financial markets. So banks, investment banks, insurance companies, NBFCs, brokerage, and pension and mutual funds. So these all are somehow working or somehow related to your stock markets. Okay, we have a big role of investment bank in the capital markets, mutual funds, hedge funds, okay, and brokerage firms specifically. These three institutions do play a majority role in the financial markets, specifically equity shares, right? Okay, any doubt?
Yeah, yes, sir. Could you please explain more about hedge funds? What are these? Like, I've heard a lot about hedge funds and hedge funding or hedging the stocks or something like that.
Okay, see, there are two things. First, basically, when we talk about hedge funds, right? So initially, they, you are aware of mutual funds? Are you aware of the mutual funds? Okay.
Yes.
What mutual funds are doing? They are taking the money from the people and they're investing in the equity market specifically. Okay, only for investment purpose, right? And for the long term. Okay. Now, these mutual fund does not have the right to invest in the derivatives and risky assets. They will not invest in the risky assets. Okay, so they'll be only going with the equity shares, and they are, again, after doing a proper research, they are investing in the equity shares only. Okay, and for a longer period of time. But hedge funds do take risks. Okay, they take risks. They invest in kind of securities which are actually very risky, and they can provide you the high risk return also. So those people who are actually interested in generating a lot of returns, heavy returns, they are actually going to a hedge fund. But you can lose a major amount of money in the hedge fund also, because there is a heavy risk attached to that, right? So they are actually investing in derivatives market, risky assets. Okay, a lot of risky assets they are investing, right? Like junk bonds. So they are different parameters they are under which they are investing. Okay, they are trading in call put options, derivatives. Okay, so that's why the hedge funds are why they are known as hedge fund, because this word actually attached to this is very difficult to understand. So when we study the derivatives, right, so I'll explain you what is hedging. Okay, so whenever we buy something, let's say I bought share at 100 rupees. Okay, now I'm expecting the stock will go up, but it can go down also, right? Let's say stock come to 80 rupees. Now I am actually sitting with 20 rupees loss. Okay. So I just want to eliminate this 20 rupees risk anyhow. So in that case, I do some, take some counter position in the market, or probably I'll do different kind of, take some other positions. So that my risk, this 20 rupees risk to be eliminated. So that's why I'm doing the hedge part in this case. I'm protecting my money to go in loss, or try to eliminate that loss from that investment part. Okay. So that is known as hedging. Fine. So these investment, these funds were actually initiated to do the hedging part, right? But they again, moved to different horizons, and they started, doing a lot of investment in different risky assets. So that's why they are known as hedge funds. Okay.
Sure. Yeah. Thank you.
Yeah. Please. Any other doubt?
Hi Rahul. Do you know some example of hedge funds in India? Like
no, in India we don't have as such, hedge funds specifically, right? But because there are companies who are actually managing your money through probably portfolio management services, right? Somehow I would say they are also hedge funds, right? Let's say you give them the money, right, and they are investing in risky assets like derivatives and all, right, and they are generating good returns, right?
Yeah.
Okay, so they are again hedge funds, right? Okay. Because they are taking money from different people, and they are investing the money in the they're creating a fund, they're creating a pool, and they're investing in the money. So the companies which are actually running the algo system and all those, right, algo tradings and all, right, they're again somehow you can say partly hedge funds, right?
Okay.
Depending upon where they are investing the money actually. But even in US and UK, they have specifically registered themselves as a hedge funds.
Yeah,
right?
that is why I was asking.
In India, we generally do this work, right? People are actually scared of this word. Okay, so they are actually happy with this word, right? Actually, okay. So the people who are actually trading the market, they are aware of this, that there are a lot of people who are doing this, but nobody actually wanted to go this. Okay, we are very conservative in nature, right?
Yeah.
Inherently, we are conservative, right?
Yeah.
Okay. So we generally don't take that much risk. Okay, but now the generation that is coming, they are very prominent, right? I'm handling with a lot of dealing with a lot of people these days. Okay, so when I started studying the stock market in 2012, there was not a single person who is actually teaching the stock market. And now see, after 8 years, I've seen a lot of developments. When I was in graduation, right, so I thought of studying the stock market when in the final year of the graduation. Okay. Now see, people are 10th standard, they are in the 12th standard, they are asking me to, sir, sikha do humko derivatives, right? Stock market sikha do. How can I teach you? Just complete your education first, right? Okay. So again, the current generation is very, up to this, right? So they are targeting this market. In see, probably if you see that, there is a huge rise in the demat account, opening in recent, last 6 months only.
Yeah.
Okay.
So
I'll tell you one another ratio out of it. See, when I used to teach, in last 2 or 3 years, there was only, let's say, a group of 40 people, right? So there might be only one girl in that batch. Okay. Now I see that there's a 40 batch, so I can see that only 10 or 12 girls are there. So this ratio is also increasing in this part. Okay. Generally, I've seen the girls are not taking part in this financial markets, but now I've seen this ratio is actually increasing. And very prominently increasing, right? And they're doing good, better than us, right? Actually, right? Fine. Okay. This is a different aspect, but still, the people are actually, much more aware of this market right now. Okay. So you should be, doing this. This is very good, right? So again, once you learn the trading part, you will definitely see that this is a good part to do, right? Okay. Fine. So any doubt, please? Till this point.
What is investment bank in specific, Rahul?
See, there are two things. One is bank and investment bank. So what is the function of bank? To take the deposit and to provide the loans, right? Okay, fine. This is the only work that bank do actually.
Yeah.
Take people money, money from the people, and they provide the loan.
Yeah.
So apart from this work, any function related to money, okay, like raising the capital from general public, like issuing the IPO. So we have to go to the investment bank.
Okay.
Okay. So some merger and acquisition going on. Some company wants to merge with someone, so they have to go to the investment bank. They will do the valuation, then they will help you to merge out. Okay. So there are a lot of every other function which is happening. Somehow in US and UK, these investment bank also do the work of brokerage firms.
What are some of the examples in India?
About the investment bank?
Yes.
So in India, we have the Kotak Merchant Bank, okay, one, okay, and you know the IDBI Capital, SBI Capital. These all are somehow some sort of investment bank only. But in US, we know that Lehman Brothers and all those Barclays Capital. You guys must have seen that, right? HSBC, okay, Bank of America, Merrill Lynch. Okay, I have worked with Bank of America, so that was an investment bank, okay. But I have worked in the Gurgaon office, so that was only a back office we have in India, back office and middle office we have. Okay, so majorly the major part they're doing in the US and UK, okay, and probably in Ireland, I think, right? Apart from that, whatever they have a back office, we are managing there in India. So we know what are the functions they are doing here. Okay, fine. So investment bank, basically, Bank of America, JP Morgan, Morgan Stanley, these all are investment banks. Okay. But in India, we have Kotak Merchant Bank and IDBI Capital, SBI Capital, Yes Bank Security. These all are somehow related to investment bank only. Fine. Okay. Okay. So till this point, we have covered a lot of part. Okay. So any doubt? Okay. No. So I think we have done a lot of part today. Okay. So any doubt, if you have, you can ask me, or we'll stop it here only. Okay. Probably in the next session, I'll discuss the IPO. I'll start with initial public offer. Okay. Okay. Then probably we'll move on to the second part, secondary market. Okay. Till this point, anyone have any query, you can ask me. I'm open to the questions. Right? No.
I have a question. What are the revenues for portfolio management in India at the moment?
Sorry, ma'am, please repeat. Please.
You said there are some organization who manage the portfolios, right? Like the portfolio.
Okay, fine. See, there are companies, there are some brokerages also, they are doing this. The PMS service, that is, portfolio management services, are actually managed by all the brokerages. Okay. Now you go to that, Motilal Oswal, right? You go to Sharekhan, they all have their portfolio management services, right? They are managing your funds, but they are specifically investing in some kind of, mutual funds and all. They are not investing your money in the riskier assets like, hedge funds and all, right? Funds, they will help you out to plan your investment, right? Equity shares, they will help you to manage your, different, in mutual funds, right? Likewise, plans like this, but they will not help you out in this kind of, trading and all. Okay. You can tell them that I have these kind of goals, right? I want to achieve this kind of goals in, next 10 years, let's say. Okay. So they will help you out to how to, you can reach through that to that goal, right? So that is the PMS services. Okay. Again, let's say you have, a lot of capital, right? And you're left out, you don't know where to invest. Just give them capital, and they will, use that capital and invest in different kind of, equity shares and all. They will generate the return for you. So Motilal do this, right? And there are other companies also, Sharekhan, Edelweiss also do this, right? So they have all together a different leg which are actually working on this part. But they have financial experts, they have fundamental analysts, they have technical analysts, they are they're just doing a lot of research, and then after that they're investing in the financial markets. Okay. Okay. Yeah, please. Any other query, guys? You can ask any query. If you have any doubt related to stock market or till this point, you can ask me.
Sir, right? I have a doubt.
Yeah.
Is there a doubt?
Yeah, please.
So what is the major difference between value investment and growth investment?
Okay, so there are two things. If you talk about growth investment, okay, so growth is that the stock which is actually growing. Let's say let's take an example of I'll go with Axis Bank. Okay, let's say so Axis Bank is a growth stock as of now. Okay, why I said this stock is growth stock? Because this is a bit expensive stock in terms of fundamental perspective. Okay, so in fundamental analysis, we study something called PE ratio, okay, price to earning ratio. On the basis of this particular ratio, we judge which stock is growth stock and which stock is under a value stock. Okay, so on the basis of this, Axis Bank is, let's say, a growth stock. So that means the stock people are ready to pay a lot of more amount to this particular share because they are expecting a good growth in the future. Both the things, growth and value, are related to growth only specifically. Okay, but the stock is already grown a lot of, let's say the stock was at 400 rupees, now the stock is at 700 rupees, but I'm again expecting this stock to rise to, let's say, 1200 rupees. So this is the growth I'm expecting. But conversely, when we talk about value investing, like the stock, let's take an example of IndusInd Bank. Okay, the stock was trading at 1600 rupees in January. Okay, in January the stock was trading at last year. Okay, the stock was trading 1600 rupees, but in March or probably in May, the stock was trading at only 200 rupees. Now, fundamentally, this stock is very good, right? There is no issue with this bank. Okay, but due to some reasons, now with this price, the stock has become a value stock. Now, why the stock has become value stock? Because due to some reason, the price fell drastically. Okay, price came to 600, this price very drastically, and so now at this price, the stock has become value investing. Fundamentally, the stock is very good, right? So when you talk about Warren Buffett, he just only invests in these kind of stocks. He follow this, the process of value investment, right? Okay, so growth stock are those stocks which are already expensive, and we are expecting of further growth in the that market. Okay, apart from that, when we talk about the value stock, a stock which is fundamentally strong, but there is a because of weak sentiment, the stock has fallen drastically. Now at this price, the stock is very cheap, but fundamentally strong, so it can go up. Okay, fine. Like again, Yes Bank, for example, Yes Bank also, right? There was a lot of fundamental hindrance in the company. Now stock is trading at 15 rupees. Now all the everything is now clear in this stock. Now over the period of time, the stock should increase. So I am saying this stock is value stock at this point of time. But HDFC Bank, again, it is a growth stock. Fine.
Thank you, sir.
Yeah, please. Fine. Or quick query, please. Please tell me. Nahin?
Hello.
Okay, so yeah, please.
Yeah, myself Kapil. Actually, I just watched your last session, and from that, I have a query.
Yeah, please.
When you explain about the gap trading, if you remember, and I really don't have a knowledge about the intraday trading and trading. I'm just making my doubt clear here. So you said that when your stocks falls down, your price in the 5 minute your price goes down, you sell, right? So
yes.
As per my knowledge, I think we should sell when your stock rise, right?
So in that case, we are just trading the particular stock only for a let's say for an hour or for a 2 hour, not more than that, right?
Yeah.
Okay. We're trying to gauge that amount when with market, market is in flow. It's like it's going up, it's likely to go up for a certain point, probably a 1 or 2 hour more, right? So let's say, so whenever we are saying, logically you are saying you are right. Okay, so but what I'm trying to say is yesterday price was here, market open, gap up today here. Okay.
Yeah.
So now stock can either go up, stock can either go down.
Yeah.
Okay. So we have to follow the flow. Let's say market is going up, so we'll follow that flow. Okay, market is going down, we are following the down flow. So we're just selling that. We are not trading for a longer period of time. We are just targeting the market for an hour, for a 2 hour. Okay, so in that if we are getting even a small profit, that is okay. Okay, but, so that is one of the technique to trade the market, right?
Okay.
Fine. So there are other techniques. Then sometimes we trade for a month, right? We create some strategies and we keep it for a month, right? Okay. Few strategies which are keeping for a week, right? Or probably 2 or 3 days, right? And these are some kind of strategies which we are only working on intraday for a single day, right? So even a small profit is okay.
Okay.
So these are the tricks to tackle the market when sometimes market opens with gap up and gap down. Okay, like that.
Okay. Thank you.
Yeah. Okay. Please. So you guys might have my number, right? So just if you don't have, take from the Yash, he will definitely provide you. So you have any query, you can ask me anytime. Fine. Okay.
Okay, thank you.
Fine, guys. Okay, guys. So I think we should stop here. Okay, probably from this point of time, and from next session, I'll be starting with IPO. Okay, so we'll start from there only. So from Saturday, next Saturday. Okay, fine. Okay. So thank you, guys, today for your time. Okay.
Thank you.
Thank you.
So like for this Saturday also, like the timing would be same, right?
Yeah. Time will be same.
Okay. Like for all the
Okay, guys.
people like who joined for the first time, so like we would be beginning from Saturday. Like this was the first session for like the entire course. So like the entire course is like around 3 months, if I'm not wrong.
Yeah.
Like
Okay.
it will cover from basics, from then stock market training, and then derivatives and options. So like, yeah, if you're interested to enroll for the course, you can message me on WhatsApp, and then I can provide you with the details. So and maybe like I can have an open session. So one sir left. So like, sir, if you could make me the host again.
Okay, fine. Okay, let me just check it once. Okay. Okay, I'll make you host. Okay. Okay, wait. Yes. I'm not finding your name. Let me see. Actually, I'm not finding your name. Okay, fine. But. Yes. Okay. Fine. Okay. Thank you. Thank you, guys. Take care. Bye.
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 Thank you. Bye.
Yeah. So if anyone has any questions or want to talk, feel free to ask.
I have a question regarding opening a Demat account as an NRI.
Mm-hmm.
So, what are the requirements, and can we do it from here in Germany? And do we need to have that Indian mobile number?
Because they usually send you the confirmation and like an OTP on your mobile number. But if you are like in the stock market training group, I had shared the link yesterday regarding how to open an account as an NRI. If you have seen it already, you can find more information there.
Okay, I will go through it once again.
And yes, like if anyone is like interested to enroll for the course, which would be starting from next Saturday, feel free to message me. So I will provide you with the further details.
One quick question, like I just read few messages from last chat in the group. The